Join me as I seek to discover the root of the 2008 financial crisis. Mr. Smith, how do you feel about your investments given the current financial situation?
I worry about my current financial state and worry that the fund in which I invested will lose so much money that it will have to close down. A lot of companies ventured into moral hazards, putting investors like me at risk. If they would just stop the subprime lending, give everyone a fair chance, I might invest in their company.
Now I seek to gain insight from a Fannie Mae and Freddie Mac associate. Have a moment of your time?
Oh, yes, come on. Hi, how may I help?
Hi. How did Fannie Mae and Freddie Mac contribute to the 2008 financial crisis?
Well, Fannie Mae and Freddie Mac were both government-created banks, and we primarily give loans to low-income people. But in 2004, we started giving loans to low-income people at such a rate that they couldn't pay their loans back, and they didn't really qualify for those loans. And in the midst of the crisis, people had loans larger than the worth of their house. So we were expecting the house's value to increase and continue to get bigger, but we had very loose guidelines for debt to income ratio, and we gave loans to anyone basically who had a pulse, and we called this subprime lending, but really it was just irresponsible.
Now let's take a look at an interview I had with a homeowner earlier today. Miss Green, tell us what happened when you met with a mortgage broker and applied for a loan.
I wanted to buy a home, and all of my friends were buying homes. They told me their homes were appreciating, and if I did not buy soon, I'd never be able to afford one. I had some credit card debt and wanted to take a year or so to pay it off. But when I met with the mortgage broker, he told me my income was high enough to get a good interest-only, adjustable rate mortgage. I asked about the payments, and he said I would only have to pay interest on the loan for the 5 years that my rate was fixed. This sounded too good to be true, but I felt like I needed to get into the real estate market before it was too late. Besides, I figured I'd earn enough money by the end of 5 years.
Did you feel that you had money invested in the home, or did you feel like you could just walk away if something went wrong?
Well, I only had 10% of the purchase price to put as a down payment. That was my equity. But with home prices going up, I felt confident that the increased value of my home would add up equity while I made the interest-only payments. It never occurred to me that my home value might drop. Looking back, this seems crazy. I did not imagine that I would lose my equity, my 10%, let alone be upside down, owing more than my home was worth.
How did your credit scores affect your ability to buy a house?
Because my credit cards were maxed out, meaning I had used them up to the limit available, and I had a few late payments, my credit scores put me in the subprime category. These are the loans for folks with less than perfect credit scores. I had a slightly higher interest rate than some of my prime credit score friends, but the interest-only payments were still pretty low. With interest-only payments, my mortgage broker said it would make it easier to keep paying down my credit cards even though my new housing payment was higher than my current rent. I knew I would be going into more debt, but I qualified and figured the bank would not approve my loan if they didn't have confidence in me.
So what happened?
I found a great little house and was one of 5 people who wrote offers. To get it, I had to write an offer with no contingencies, meaning that even if there was stuff wrong with the house, I still had to pay the same amount I offered. When we inspected the home, we noticed that the roof was old, but I was so happy to get the house, I didn't care. A year later, the roof started leaking. It was going to cost $10,000 to replace it. I got a home equity line of credit, which is a second mortgage, to cover the cost. At the same time, I did not get a raise that I had been counting on. Over time, I could not handle the payments for my 2 mortgages, credit cards, and other things. I started missing payments on my mortgages. My credit scores dropped even more. Then, in 2008, I realized my home was worth half of what I had paid. I stopped paying the mortgage, and the bank has given me notice that they intend to foreclose on my house. I am so sad to be losing my cute house, but I'm also kind of relieved. Now, I doubt it will ever be worth what I paid for it. I think the whole real estate market is just collapsing.
What, in your opinion, precipitated this financial downswing?
Well, If you ask me, it really all goes down to subprime mortgage lending. You know, mortgage banks like Fannie Mae and Freddie Mac, they should have known better, offering all these adjustable rate mortgages. You know, interest rates at the beginning were pretty puny, but by the end, like a mountain. You don't do that. That's bound to result in mass foreclosure. Is it their fault?
Don't you think it was overly risky to buy mortgage-backed securities while home values kept escalating? I mean, wasn't it obvious that homes priced so high at the time that the inevitable decrease in real estate worth would spell out doom for your investments?
First, one must remember that business is business. We at Lehman Brothers have a responsibility to make our stockholders and our investors pleased with our decisions. Number two, I think there's a serious fault in the government's decisions. I didn't see Henry Paulson or Ben Bernanke come to bail us out like they did for Bear Stearns. Something's wrong with this system, I believe.
Do you have any suggestions for the future?
Yes, U.S. government, stop pouring out the money and start regulating the bad guy brokers.
No, they were.